Recently, a news article has been making waves discussing settlement ratios in health insurance claims. It highlights a significant concern that some private insurers reportedly pay less than 80% of the claimed amount. This has understandably caused a lot of concern, even panic, among people. Today, we'll break this down. We'll address the numbers in the report, explain how settlement ratios are calculated, and most importantly, give you the clarity you need to navigate your health insurance with confidence. So folks, before we begin, let me tell you something about Ditto Insurance if you're new here. We are an insurance advisory platform and we're backed by Zerodha. We have 10,000 plus reviews on Google with an average rating of 4.9/5. If you are in the market looking for a health or a term plan, then look no further than Ditto because we offer no spam and we give you quality advice. So folks, with no pressure to buy, if you just like to compare policies or know a lot more about insurance, then book a free chat with us with the link in the description. Now, let's start with the report itself. The report in question states that many private insurers paid less than 80% of the claimed amount in 2023. It paints a stark picture. If you claimed 1 lakh rupees for a hospital bill, you might receive less than 80,000 rupees from your insurer, with the rest coming out of your own pocket. On the surface, this is worrying. But here's the thing. The report doesn't explain how these numbers were calculated. That's a critical omission. Why? Because settlement ratios are not directly provided by insurers. They're derived from raw data using formulas. And different methods can yield vastly different results. Let's take HDFC Ergo as an example. You can find their claim settlement numbers publicly on their own website. Once you open this document, search for the NL37 form. This contains all the raw data you need to calculate settlement ratios. Using this data, we calculate the total amount settled to arrive at the amount settlement ratio. But what exactly do we mean by total amount settled? Total amount settled refers to the actual amount of money the insurer paid out to the policyholder for valid claims during a given period. This includes payouts for cashless claims as well as reimbursements. Now, how is this calculated? Insurers disclose data on claims in their public reports. Here's how we process it. Total claims handled during the period is equal to claims outstanding at the beginning of the period, claims reported during the period, claims closed during the period, and claims outstanding at the end of the period. This gives us the net claims the insurer actually processed during the year. So simply put, total amount settled is the sum of the payouts made for these claims. Using this data, we can calculate the amount settlement ratio, which is total amount settled divided by total amount claimed. We calculated the settlement ratio of HDFC Ergo to be 96.2% for 2024. This means that for every 100 rupees claimed, 96.2 rupees was paid out. Even for 2023, the ratio was 92.64, far above the 80% cited in the report. So, why the discrepancy? One reason could be the inclusion of closed claims in the report's calculation. Let me explain. Sometimes claims are closed because they are incomplete. For instance, when the policyholder didn't submit required documents. So, if a policyholder claims 2 lakh and the insurance company cannot approve the claim because there is a lack of documentation, then you really can't blame the insurance company for this. And that means including closed claims in the formula can severely distort the amount settlement ratio. Similarly, claims that are outright inadmissible due to policy terms or waiting periods might be included, leading to lower ratios. It's like counting requests that were never eligible for approval in the first place. It's misleading, isn't it? Another aspect to consider when interpreting settlement ratios is the distinction between retail claims and corporate claims, particularly in the case of public sector insurers or PSUs. Public insurers often have strong affiliations with large corporations, providing group health insurance policies to employees of these organizations. These corporate policies have certain unique characteristics. First, simplified process. Corporate claims typically involve pre-negotiated terms and streamlined procedures, making them easier to approve without much scrutiny. Second, high approval rates. Since these policies are tied to well-established businesses and come with group-level commitments, the claims from such policies are generally approved without the challenges faced in individual retail claims. Third, lower average claim amounts. Corporate policies often have defined limits and relatively lower claim amounts compared to high-value individual policies typically offered by private insurers. As a result, PSUs often show inflated settlement ratios because the majority of their claims come from these corporate policies. While this is not inherently a bad thing, it creates a skewed picture when comparing their performance to private insurers, who primarily cater to individual retail clients. Private insurers, like those we work with, focus on providing comprehensive individual policies, which often have larger sum insured and most robust benefits. Naturally, this makes retail claims more complex, involving detailed assessments, higher payouts, and varied cases. So, while PSUs may show higher claim settlement ratios on paper, the comparison isn't exactly apples to apples. Retail-focused insurers operate in a very different space, catering to unique and more complex individual needs. Now, let's tackle another question. Why don't insurers pay 100% of the claimed amount? Here are some valid reasons. First, policy limitations. Basic health insurance policies may not cover consumables like gloves or syringes unless you've opted for a specific add-on. Second, excluded costs. Non-medical expenses like registration fees are often not part of the coverage. Third, case-specific factors. Every claim is unique, and the final payout depends on the factors like policy terms, hospital charges, and documentation. Another important aspect is the comparison between public and private insurers. You see, the report highlights that public insurers often have higher settlement ratios. While this is true, there may be a simple explanation for this. Public insurers have typically offered basic policies with limited coverage. These plans are simpler to process and settle. Private insurers, on the other hand, often provide comprehensive policies and usually sell policies with sum insured of Rs 10 lakh or more. These policies include features like private room eligibility, modern treatments, and waived restrictions, making claims more complex to evaluate. Perhaps the only way to fully settle the debate is to actually have the regulator prescribe a common formula to calculate ratios and standardize disclosure norms. While some companies report data one way, others have a wholly different approach to representing data. This doesn't always give you the full picture. And finally, it's crucial to understand that settlement ratios are just one piece of the puzzle. Evaluating an insurer requires looking at several factors like policy coverage. Does it meet your specific needs? Add-ons. Are exclusions waived or are consumables covered? Claims process. How smooth and transparent is it? And network hospitals. Are your preferred hospitals even included? So, where does this leave us? Reports like these can raise valid concerns, but they also need to be read with caution. Numbers, especially percentages, can be framed in ways that don't always tell the full story. Settlement ratios are important, yes, agreed, but they're not the only metric. What truly matters is how well your policy protects you when you need it the most. If you have questions about your policy or how to interpret these numbers, reach out to us. We're here to help you make informed, confident decisions about your health insurance. If you found this breakdown helpful, share the video with someone who might benefit from it. And if you have questions about your own policy or settlement ratios, drop them in the comments. We'd love to help. Until next time, folks, happy insurance hunting.